All right, stock market analysis and projections. We'll start out with some important information. Read this slide. It just tells you how we approach our analysis and about you using what we give you or what anybody gives you as far as their own interpretation of the markets and the importance of your own trade ownership. You must own your own trade. You must then manage it on your own. All right, market brief for this week. Well, stocks index stayed very strong on mixed background news. Government shutdown, well, it's in our third day, and they're fighting like 8-year-olds. Anybody have seen anything on social media that they're putting sombreros on the heads of the memes? And I have no idea what that means. I think it's ridiculous if this is the way they're going to deal with the shutdown of the government. But anyway, history shows that is really no effect when the shutdowns are on. And you might think, well, shutting down the government would be a negative, but you could see the stock market now. It is completely ignoring it. U.S. GDP was stronger than expected at 3.8%, but the ADP jobs was a big miss. So you have conflicting economic information there. And the unemployment report today was delayed because of the government shutdown. So that might have been convenient. So we don't get to see how bad the employment situation is. And I do think it is worsening considerably. Mega caps, they're mixed. AI strong again. Netflix down on Musk is on a campaign. He unsubscribed and is trying to get other people to unsubscribe from Netflix based on the woke content or how he interprets content as being woke. And there is some huge amount of unsubscribing going on, as I have read. The reports show that. I don't know if that's real, but that's what I'm reading. And that has been weighing on the Netflix stocks. Tesla also down. They had some good numbers. Now, this is the end of the incentives, and thank heavens for that. I don't want to pay for anybody else to buy their EVs anymore. I don't think any of us should. And I've always been against government welfare, and I think that that is a form of government welfare. So there should have been never been an incentive for anybody to buy a car, an EV, or an incentive for anything. The government should stay out of that and let the free market determine what's a good product and what is not. Well, that better sales that we had seen now came from people running to buy them before the incentive expired, $7,500. And that definitely has pulled demand from future sales. Tesla's going to have to cut prices to offset that, but that probably will not help. And that's why the stock has been very weak just in these recent days. Indexes up about 1.5 now to almost 3% as the market has gotten stronger as we have done this report. And Russell's the strongest, up close to 3% on the week. That actually is good for the market because you can't have AI leading the way up all of the time. And when we get into rotations in bullish markets, that tends to feed the upside because they can always find some group that's doing better and somewhere to switch the money into. And that's really what we've been seeing this week. So that's the report as of around midday here on Friday, October 3rd. Let's switch over and we're going to do some talk about the market. But first, before we do that, take a look at this. This is a look at the top 8 weighted stocks in the S&P 500. These top weighted stocks equals 40% of the indexes. Yes, 40%. That is incredible concentration, something that we have never ever seen before. Even back in the 70s when the market was making a secular bull market peak and went into that long 10-12 secular bear market, those Nifty 50 stocks didn't even get close to this type of concentration. And essentially, when you are trading the stock market now, trading the indexes, you're trading these 8 stocks that are 40% of the S&P 500 index. You can imagine the earnings concentration also, as the other 92 stocks that are out there have just so little effect on what the stock market does compared to these 8 stocks. So if you're trading the markets, you've got to be looking at these 8 stocks. And that amazing concentration, of course, has other effects on the market. And I'm not talking about valuations ever again, because valuations simply don't matter. So I'm not going to talk about them. I'm not going to say one word about valuations, and don't look at this slide. I don't want you to read this slide, because that would be a bad thing, because I'm not going to talk about valuations. I'm not talking about them, and don't read this slide. Let's move on. All right, let's look at the stock market. We're going to look at the S&P 500, two scenarios: multiple time frame analysis and projections on the S&P 500. We'll look at cycle analysis and our indicators, and we'll talk about how we use them both together. And then we're going to look at the VIX, the big picture, monthly, weekly, and daily. And then we'll also look at our market condition monitor, which just gives such valuable information. Earlier in the show, Matt demonstrated that when he was talking about our level 4 special that we're running. So we're going to look at this. VIX is going to show us that it's in a time frame when it certainly is due for some significant upside moves. And we will see that as we look at these charts. So we're going to switch over now to the charts, and then we will get to the MCM next. So I'm just going to reduce this and switch us over to the charts. All right, here's the S&P 500. Here is the weekly chart. So the first thing we're going to look at is the amazing rhythms that are in the market. And then we're going to look at the indicators that we look at. So right now, what we have is a condition that we call a swamped condition, or a extreme right-hand translation. And that is, as you could see here where this low came, that this next cycle has rallied all the way, almost all the way through this whole duration of this cycle. So you can see in here that each of these rhythms in here are very similar. Here was that trough, here's a trough, here's a trough, here's a trough. What's important when we look at these is that when the minor and dominant cycle come down together is where you get the bigger corrections. This was a little shorter cycle. So this was 9.4% down. This was 10.9% down. This was about 6% down right over there. And this one right over here last October, which is a very similar shape to what we had over here, we were looking for about another 6% down, and what it did was fell only about 3%. So we have to consider that this decline, as we saw a year ago, could be similar to what we see now. Now here you can see these yellow zones are these periods of risk. This is where you get the potential big correction. Again, this 6% correction here, this only 3% correction, and of course a bear market well over 20% in this one right over here. But this one, we leave almost no time. And if you look right over here at the note I have right over there, whoops, the daily cycle sync is either late October or early November. So in other words, there is a cycle on the daily chart that syncs up in this period about a month from now. We'll call it 3 to 5 weeks or so. That is why this point's over here. Now, the decline in here, you can see we're showing something similar to this or this. That's a very bullish look at the market, where it says you're probably going to make some kind of a peak in here and get some kind of a very modest correction right here, and then be moving up again. I'll look at the daily chart and we'll get a little more granular on this so that we can see some of the numbers on there. But this, only some 3% would only take you down just under 6,500 right in here, looking at that, which is just a very bullish look. And then once that's over with, of course, it would be moving up again. If it wanted to continue spiking right now, after it has hit this level right there at 67.65, which we put up on the charts, some weeks ago, but I thought no way it could get there. But here it is. Here you could see the next level right over there is at around 69.40. That could happen before this decline comes into place, because we don't have any sign of a top. Here is where your reversal scout, call this the RS, turned up right over here. That tells us about this trough right there. And when you get a decline, and there's not even a decline in the reversal scout, it just shows you how strong the market is. And once this turned up right over there, it has not given any sign of weakness whatsoever. And this momentum is what's driving advance that we see in the shorter term. So again, a corrective process in what we call the period of risk, where this aligns with the daily chart and some kind of a pullback in there. Let's look here at the daily chart. So you can see in here these rhythms. Now these cycles right in here, you can see the green, that's essentially the 16 bar Russell cycle right in there. And we have a 23 bar cycle right in here for the S&P 500. This has had no decline in there. This was only the 16th day, and the probability of that being meaningful is small. Same thing happened over here. You know, it pulled down right over there to a similar time frame. Then he had about 5 or 6 days up and 2 big days down. Now look at the nature of these cycles. This had a few days down. This had a few days down on these very positive cycles that keep trending up. Here's a couple of down days, a couple of down days, and that's probably what we're going to get in here. Just a couple of down days, probably sometime next week, and then the market turns up again. This right-hand translation is the same thing as we've seen here and here and here and here. Why does the right-hand translation occur? It occurs because of what I showed you on the weekly. This upward momentum will not allow corrections here on the shorter term. This VTL that you see right over there, it's called a valid trend line. You can learn about those in our cycle analysis workshop. That you can see is where it's been, you know, coming down to, and you're going to have to get a break to the downside to give us anything negative. But with only a few days left and supports right in there, it's very likely not going to do that now. So we're probably going to get more positive formation following this little potential pullback that we see in there coming over the next 2-3 days. The scenario that we're going to look at 2 scenarios. See, this cycle syncs right over here with the weekly early in November. This is this time frame right over here. That's from the last couple of days of October out till about the second week of November. And that would mean there'd be a formation in here that tells you that a peak is setting in and that weekly pullback is in place. Let's examine what those possibilities are right now based on the sum of the evidence. Again, what we have in here is the slim ribbon positive, and you can see how the slim ribbon gives support along with the VTL. Here you have the reversal scout that you can see right in there and has been bullish except for this little tiny dip right in there and telling you how positive things are. Look on the bottom here. This is your option bias indicator. This is a fantastic indicator, whether you're an option trader or not. But this said, keep your option positions biased on the long side. It's been very clear. You look at all 3 of these indicators that we're looking at in here, and they're saying stay on the long side the whole time. No matter if I'm looking for any kind of corrections, that doesn't matter because the market's wasn't setting up for them yet. So this only has a look back period in here of about 6 months. You can see back over here where it was red, but you would get too many dots in there because we built this to only give us a look back of 6 months in there. So this is a very bullish scenario that we're looking at. So if it were to continue in this bullish scenario, and we're going to look at that possibility, we're going to look at the positive scenario here. So this is essentially what it would look like. If it followed that period like October a year ago, you have that little correction, you move up to new highs again, and then maybe you pull back 3 or 4% into this period right over here, maybe back down only to similar levels to where we are now. This would be minimal effect from the weekly corrective period. So this period right in here would occur with a little bottom, further upside move, and then moving down and not moving down very far. This is, of course, a very bullish scenario and in line with what we've seen in the markets now and in line with a continuation of the bull market past this weekly corrective period. Now, if it weakened and things started to change, what would happen would be we'd start to see the 2-hour chart weaken. We would start to get some sense that these were beginning to roll over. Our option bias indicator here would then turn neutral. First, yellow would be in the middle here, and then potentially getting red. So that would be a more negative scenario. What would that look like to us in here? Well, that would look like this, where you had this decline and then this rally occur. Because of the shape, it would probably make a new high, but then this would be the normal effect from the weekly corrective period down to some support levels. So this support level on the weekly is just under 6,300. That would be a 6.6% decline, very much in line with the norm that we have seen in these bull market years. A little more dramatic one would be down to this level at just around near 60 on the S&P 500, 6,000. That would be about a 10.7% correction. Based on the strength that I see in the markets now, I think that's not a high probability, but a normal correction right over here down to that just under 6,300, that would be a pretty normal correction period in a fairly strong bull market. So that's this corrective period here during the period of risk on the weekly, and this would be the more negative scenario, which is really pretty normal for a corrective period right there. Which one do you think it is? Well, I don't really know if you can evaluate it any differently than I have. Some people would say, well, just bullish. It's just going up. It's just going to go up. AI is strong. We're in a new paradigm. All of those things, and they're just going to go up. So don't talk to me about anything negative. And I couldn't even blame you if that was your response to me. So that's the more normal period of correction right in there. This is the more positive shape that it could have, where it has a little correction, comes up and then pulls back 3-4% right over there and finishes that weekly. And this is where we are right now. Just not sure quite how to determine that. Now, let's take a look. Remember that this corrective period for the weekly chart comes out over here into November, or late October through the second week of November, when we expect to see the completion of that weekly cycle. Look at this. Now, this is the daily S&P 500. This goes back over here to April, where the market made that corrective bottom right over there, turn neutral, and then turn green. And this is the slim ribbon on an area chart. Look at the slim ribbon PO as it keeps telling you about the upward resumptions in there. This is so phenomenal. And Matt gave you some review of this back looking at level 4. This is a level 4 setup when you look at this. So take advantage of our special $99 deal on level 4, and this you'd be able to set this up on the Think or Swim platform, which is, I think, just a great way to see the market. So there you see the daily. Let's take a look at the 2-hour. So this is a very unusual look in here, and that is looking at these 23-day cycles on a 2-hour chart and how they overlap, how it looks on a 2-hour chart. And here again is this period that points to the next trough, which is plus or minus a few bars on a 2-hour chart out to October 7th. So we'll say October 6th, October 8th, somewhere in there, sometime middle of next week is where that corrective period on the daily chart would line up. We would look for the slim ribbon in here to lose the positive structure on the 2-hour chart, turn negative. Now, in a bullish scenario, the bottom MCI, the market condition indicator, that probably will not budge off bullish. Because this would be such a minor decline. But the slim ribbon PO, that could turn negative in here, and we could start to get underneath the slim ribbon, which you can see is often very good support. You can see how it found support right in here the whole way. Then you got a little negative right in there, and this is that 16-day dip that I said really was too early to be where I thought the cycle low had come, and that it was more likely to come out over here. And again, this next cycle right over here takes you out into late October right over there. There might be another cycle after that before we finish this daily pattern. So this is the look at the sum of the evidence, looking at the S&P 500, where this correction is due in here, and we have no sign of it yet, and all the indicators are positive. This formation is positive. I gave you the 2 scenarios. This is the very positive look at momentum and all of the indicators that have kept you on the long side of the market. And then this 2-hour chart right over here. You can actually build this same type of a chart grid, and I can even send it to the people who are level 4 members who like to look at things this way. So take advantage of our level 4 special. Let's now take a look at the VIX, because I think the VIX is very important to look at when we're looking at these charts, because especially when we're talking about the potential for some correction. So this is a monthly on the VIX, and this is really pretty spectacular. Look at the cycle rhythms in here. They are really clear. And we are in a period right now where it is pretty likely that we could get some upside spikes in implied volatility. So right now there's a lot of complacency, and I'll show you that on the weekly and daily chart also. And these gray oval periods are periods where those cycles are sinking right in there, and then you can get some upside. You can see you got this big upside spike right over there, temporarily lasts for a few minutes. This is a monthly chart, of course. And we're in this period where it's very likely we're going to get some upside spikes in implied volatility over the next year, 2 years, 3 years. So I think we're into a period now where we're in a super complacent period right now, as people are very comfortable with 40% of the S&P 500 being just 8 stocks, and they can just keep pouring their money in there. But we're going to be in a period for some years where we can see some pretty big spikes in implied volatility, hence some pretty big declines in the markets. Let's now look over as we switch over to the VIX on the weekly and the daily. We'll come back to that in a moment. And let's just go to the VIX right over here. And let's look at the weekly pattern in here. And you can see that there is a consistent rhythm going on right in there right now. And we're in the period where we would expect that implied volatilities would pick up pretty significantly. We have actually a saucer bottom being set up in here, and I'll show you that on the daily, which often sets up a pretty good move, saucer bottom, saucer tops. But this is the weekly. We should be getting some upside in here fairly soon. You can see in this weekly cycle, we're now 6-7 weeks into it. Here you were, did a pretty similar thing, and then there was a pop-up right over there. Here you did a pretty similar thing and another pop-up right over there. So that would follow with the scenario of a potential decline in the market for a correction into later October and into November. And now when I switch over to the daily, and I'm going to put up the daily chart right here, and you can see that saucer bottom that's forming in there. And this is very likely to give you some significant upside moves. Pretty soon, you can see in the saucer, this was only a move up to 20. This was a move up to 22. This was a move up to 22.50. I think it's pretty reasonable to expect that kind of a move to be coming fairly soon. You can see in here this cycle right over there, and it has potential for a little dip right over here. This right over here is October into late October, and this aligns with the time frame that I looked at on the daily chart and the weekly in the S&P 500. So I think this period over here is going to give you an upside spike in applied volatilities as the market then does have that corrective period. Is it going to be 3%? Is it going to be 6.6%? Or is it going to be 10.9% or whatever it was I showed you back over there in the S&P 500? I don't know. I just know that with the present concentration that we have in the S&P 500, if those stocks start to get weak, the decline can be pretty sharp. So that's a look at the VIX and the monthly, weekly, and the daily. Let's take a look now as we switch over to our market condition monitor. I like to look at this every time we do this because I think it's important to see. Here I'm looking at short term, and you can see in here just very bullish readings that you have in here on all of the indexes. On the intermediate term, you can see that very bullish. The SPY actually turned very bullish August 11th, and that was a step up from bullish to very bullish. So you can see that these have been, very bullish for a long period of time. The short term has been very bullish, ticked up from bullish. And the near term, which is just for those that trade a few days, swing is very bullish. And your intraday traders, and this is what you get with level 4, you can see right over here, look what's happening. So SPY and QQQ is just now turning downward in here and giving you some sense of neutrality. Is that going to mean anything on an intraday basis to the longer term? Well, that's yet to be seen. What we first want to see is this near-term change to neutral, and that would be an indication. And what I want to do is kind of notify myself when those are going to turn neutral. So I'm just going to put that in there. Let's see, I have that in there. I'm going to put it in all of them neutral. So the app is going to notify me when these go neutral, and click that right over there. And then we're going to get a sense for when these things are changing. So we have an app you can download, and it'll send you notifications right on your PC. So that's just a great app. So this is where we are. What are the really good stocks that we're looking at right now? Well, let's look at the trade setup conditions in here, and you can see the ones that are very bullish. Again, I'm set up now on the near term, so I want to go to short term right there, and there's your very bullish stocks right in there. And you can see how they've done exceptionally well. What are the stocks that are just turning bullish today or the last couple days? Then you can get to that by setting this to the near term right over here. And let's just look at the ones that have turned very bullish these last couple days. And you can see that the ones that have gone, whoops, they're not sorting correctly. That's where I want them right there. So these are the ones that just in the last couple of days have turned very bullish on the near term. Let's go to the short term again and look at the ones that are negative, or the ones that are very bearish right there. And you can see in here, Kimberly XLP, that's the consumer staples, Procter & Gamble, Katera, Energy, Global X Argentina, that's interesting. The S&P Global right there. Intercontinental Exchange, wow, very bearish. Domino's Pizza, Colgate, T-Mobile. You can see as we go down here, these are the ones that have turned very bearish now in a very bullish market. So that gives you a heads up for the ones that are pretty weak. That's everything I'm going to show you on that right there, as we looked at the MCM, and that of course has our proprietary algorithms built into it. I want to remind you that we have our top tier level 4 trial on right now. This is for first time subscribers and upgrades. You get everything that's on this page, everything that you show me, that I showed you that I'm using right now for the analysis. The team used it all also. That's a special 1 month level 4, 37% off. It's just $99. It will not renew. It's not recurring. We're not going to bill you again. We're going to let you look at all of these things for 99 bucks for 1 month, and then you can decide if you want to stay on. If you don't, we get it. Maybe you want to try a different level. Then write it to Matt at askSlim.com. You can ask him any questions, or you can decide at what level you want to stay on. And if not, well, thank you for trying that for sure.